It's been a tremendous effort to finally deliver the results that speaks and confirms to what we've been discussing. We only look at the potential of how much chrome lies in those surface material that is recoverable based on our current performance at our fine chrome plant and at Inyoni. It equates to north of 500,000 tons of chrome, saleable chrome product. The results are good, but the results going forward gets even better.
Hello and welcome to Crux Investor. Following our interview last week with Leon Coetzer, the CEO of Jubilee Metals, he talks to us today about his financial results, some very impressive numbers. Click on the link below to go and see those. Plus, they've also raised £6.5 million. We talk about what the use of those proceeds will be and what he hopes to be able to generate for shareholders. If you want to look at the topics discussed in the interview, look in the description below, click on the relevant timestamp, that'll take you to that part of the video. You can also click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, click the notification bell. Let's hear what Leon had to say. Good morning, Leon. Lovely to speak to you again.
Good morning. Thank you for the opportunity.
Well, yeah, we had a great conversation last week. Thank you for that. It had such positive feedback about the way that you told the story, and people's understanding of the business, I think, has definitely improved as a result. Could you talk to us about today's announcement? I've seen some fantastic numbers here in this press release. You must be very pleased.
Thank you. Yes, we are pleased. It's been a tremendous effort to finally deliver the results that speaks and confirms to what we've been discussing. In our interview, we explained how we are rolling out the implementation of our operations, how we expect these operations to continuously push our earnings up as more and more of our plans come to fruition. And it's very nice to actually be able to deliver the results that speak to that strategy. And of course, what is nice as well as part of that is where we do mention in the announcement, maybe don't highlight it significantly, but the fact that that's not where it all ends. The results are good, but the results going forward gets even better.
Well, you can say that again, because I'm looking at revenue up 67%. You've increased your cash position. Your balance sheet is vastly improved. It definitely puts you in a very strong position as an organization to deliver some of the plans you talked about last week, which were, for me, just ideas at the time, but I can so see how they can become more concrete. So do you want to talk to some of the numbers first?
Yeah, no, sure. Thank you. Just on your point on balance sheet, you're quite right. Balance sheet is strengthening. That alone is also very important in our business. We, as Jubilee Metals brand, as we're building out that brand, we need we need to demonstrate our ability not to always only partner, but also have a balance sheet that we could leverage to increase our acquisition ability and our ownership ability. So a very important point that we drove very hard as well. If you just, as you say, get back into our numbers, earnings, of course, nicely up. At £7 million, it's very nice to have that kind of earnings at net group consolidated. Revenue, as you said, up to £23 million, very strong showing there. And that is before many of our chrome operations have come into operation. It's before our Windsor PGM project, which is only commissioned in August, comes into those numbers. And I think an important number that sometimes gets lost in all these numbers is if you unpack those numbers, yes, our cash position exceptionally strong from where we used to be at the year end of £18 million. But that is set against the fact that during that period, our capital spend grew to £13 million. And that's an indication of the investment we're making to ensure our growth is being sustained going forward. And that number, often, you have to go dig in the numbers to find that, to see what is behind some of these earnings growth numbers coming through.
Yeah, I mean, and again, when we talked last week, we sort of understood the importance of the morphing of your business from a service provider to also being an owner of some of these assets and being able to capture all of that value. Which I think is really important as a business to grow. But one of the things that I was interested in was the conversations we had about working with some of these very large names, industry players, to give you access to bigger projects. Now, with bigger projects come bigger commitments, financial commitments. going forward. What are you doing about that? How are you going to ensure that you can move forward?
No, that's a very good question. You know, as we debated in our discussions last week, with our balance sheet strengthening comes the ability to actually now utilize our balance sheet, to start leveraging our balance sheet. It's something that we drove quite hard. And of course, to be able to leverage your balance sheet, it has to be supported by growing earnings, growing revenue, and very importantly, repeatable earnings and revenue. And now that we've reached that point, it allows us to utilize that balance sheet to approach those kind of projects, those larger projects with these mine houses, gives us the confidence to approach and try and secure those projects.
Okay, no, I understand that. So, I mean, to that end, you've also announced today that you've gone to market and raised a little bit more capital. What are you going to? Obviously, some shareholders may be concerned about dilution. What are you going to use that money for, and why have you done it?
Yes, no, exactly. I mean, if you look at our cash position, our earnings growth that we demonstrate, it's an obvious question. Then why go and now raise money by diluting shareholders? But to put into perspective, yes, quite correct. We've raised £6.5 million, roughly the number, from institutional-based shareholders. What that money is being used for, to put into perspective what growth that money brings, it does a number of things. At the moment, Jubilee is in a position where a number of trains are arriving at the station simultaneously. We are, as we speak, building and constructing our Sable Zinc refinery in Zambia, off our own cash balance right now. At the same time, on the back of that acquisition of the PGMs and the chrome from Samancor for our Inyoni operations, which is roughly a $21 million transaction value, which is the PGMs and the chrome combined. Simultaneously, we're also currently rolling back our very successful fine chrome process solutions, which we built at Dilakong. We're rolling that back into both Inyoni and our Windsor chrome operations. Now, if you look at those delivery of those projects into our current operations and what that means for earnings, you know, if you just look at the acquisition of the chrome rights, which we've secured, and if you only look at the potential of how much chrome lies in those surface material that is recoverable based on our current performance at our fine chrome plant and at Inyoni, it equates to north of 500,000 tons of chrome, saleable chrome product, that just that can deliver. And you know, if you look at current chrome prices, it's not difficult to make the calculation when you're north of $100 a ton of product to equate what does just that chrome component, what's the value of just that chrome component. And to put that even into perspective is to remember that at Inyoni, the majority of the operating cost to recover that chrome is already being covered by the PGM operations. It's already reflected in these numbers before we add the chrome revenue. So your chrome revenue and your chrome earnings are going to be quite a similar number for Inyoni, to put into perspective what we thereby, and that excludes what the PGMs bring. It excludes what the additional fine chrome we're rolling out brings. So it was a position where the company was, where we realized the frustration caused by the dilution. We minimized that dilution because our earnings is growing at the rate it is, to be able to maximize our funding ability of all of these projects simultaneously and deliver a significant potential further jump in our earnings.
It's an interesting point. I mean, I know you probably can't put a number on it, but you've given us some data there, data points where we can probably calculate what that number could be or could mean to you as a net contribution to the company. And a reminder, as a reminder myself and the viewers, that you are a metals company, but you're not a mining company. There's very little of the risk associated with mining in what you do, because it's at surface, it's a sort of known quantity, as it were. So we can, I guess, use previous numbers to make some assumptions about what it could look like going forward, because there's none of the mystery of what's under the ground here.
Quite correct. I mean, you can make it, and there's some really simplistic markers one could use. If you look at our results, our margin that we run on our PGM Inyoni process, it's north of 50%. So if we're going to add 500 ounces per month of PGMs onto our operation at Inyoni, it's only a variable cost component you're adding. So your margin is not 55, but probably more towards the 75% margin. So every ounce additional, because of these rights we now hold, that we bring on, it's north of 70% of that revenue goes straight to the bottom line. On the chrome side, it's not a difficult calculation. When we already are producing the chrome at Inyoni, all of those costs are already absorbed within the PGM production numbers. The revenue ability of the additional chrome, the vast majority of that revenue flows straight to the bottom line as earnings because the costs are already being recovered under the PGM operation. Equally, if you look at the rollback of our fine chrome facilities we're going to do into our own operations, these are add-on operations. So they don't come with, first of all, you're accurately stating, there's no mystery around the mining component at all. It's on surface. We are operating as we speak. All we're now doing is adding the fine chrome process to recover a component of chrome we are currently discarding out of our operation. So it's a very accretive earnings rollback onto our operations based on existing operations, based on existing numbers.
So you've got the intellectual property, you've got a few trains coming into the station at the same time. We talked about some bigger opportunities globally as well, which you've got to get over the line. You've got to close those deals down, okay? Otherwise they're just talk. Have you got the people to be able to deliver this now that you've got the money to be able to deliver some of these projects?
Excellent question. I mean, our company is going through an evolution. If you just look over the last 4 years, the evolution our company has gone through. If you look at our executive management level, if you look at our middle and senior management level, it's a constant evolution where we are carefully ensuring that our ability to draw high quality individuals into operation leads the rollout plan of our operations. And Elsie, you are absolutely 100% correct. Beyond all the IP and the knowledge we have in implementing these solutions, if we don't have the right operators to execute, this will be stunted very, very quickly.
Well, I have to say, really enjoyed reading through the announcement. There's some very exciting numbers in there that people should pay attention to. I think people have got a better sense of what it is, what the scale of the opportunity is for you and the sorts of numbers that one could apply to this in terms of this de-risked metals company model. Look, please stay in touch with us, Leon. Fascinating story. Hope people get behind it. It'll be interesting to see what the market makes of it today or over the next couple of days. Good luck with all these trains coming into the station.
Thank you, and we certainly will. Thank you very much.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.